We do have Sunil Subramanian, who's the founder and CEO of Sense and Simplicity, also joining us. Thank you so much, sir, for taking time out and joining us this morning.
Good morning.
The first thing that I wanted to understand is what's the first sense that you gather from this in terms of what this really does? Do you see this boosting operational efficiency? And could you perhaps simplify what this means for investors as well?
So it's very simple, right? I think it's a very important thing and it'll be a huge impact. And I explain why. Suppose as a FYI, I am looking today to buy a particular sector and sell another sector, stocks in that, because I've changed my view, the earning season, for example. So when I do that, if I'm buying something and I'm selling something the same day, I cannot use, as per current, the sale proceeds of what I'm selling to fund what I'm buying. So which means I have to have a borrowing line for what I'm buying separately. And then when the sale proceeds come through, that borrowing line get reset. So there is funding cost, there's changeover cost, and it's a huge. And just to give you a sample of this, right? If you take a typical week in a thing, gross FIS sales are about, let's say, 60,000 crores. So net, when they come to say that, oh, today FI sold 3,000, what it means is that there was 70,000 crores of selling and 67,000 crores of buying. So the net difference is what get reported as net sale. But imagine that for all those 60,000, 67,000 crores of buy, I have to fund it. And that 70,000 crores of money which comes in cannot help me to fund this. So I think it's a very, very significant move. And the importance, while I kept on a general week basis, is on rebalancing days, when it's not the FIS decision, it's the index decision. So whether it's the Nifty, the Sensex, the Morgan Stanley MSCI index, or the FTSE, when they rebalance the India leg, they are forced, especially passive funds, if you imagine, they have to stick to it because they can't afford a tracking error. So they have to immediately go and change over that day when the index changes. So there's a huge amount of parallel buying and selling, but the net impact may be less in terms of the FI flows. So I think this has a huge cost impact, a huge liquidity impact, and with the settlement cycles now going parallel to each other, right? I think it'll give you a huge incentive for FIIs from an Indian market perspective.
All right, then. So huge incentive, that's the word coming in from Mr. Subramanian as well. But sir, I wanted to understand if you concur with this view where some are saying that this could mean less red tape, smoother flows, and a more investor-friendly cash market as a whole. Does that really sum this up for you?
It sums it up, and especially since you mentioned it, for the retail traders, what it does is on these index rebalancing days, right? There's a huge bid-ask spreads that will narrow down. So you'll get a very, very stable price discovery. So I think it's a spillover effect will be that even for retail people on such balancing days, they don't have to suffer huge, bid-ask spreads or, not able to get the price. So I think it's overall market liquidity, even for retail traders, is a very positive move. So I'm in agreement with what you just said in terms of the summary.
Then, the one thing that I actually wanted to understand is where from here, because is there more room perhaps that you see for the operational efficiency also to be boosted further? Is there more room for reforms when it comes to retail traders? Is that something that you're looking at? Is there anything that makes it to your wish list that you see, simplification coming in from?
See, obviously, there's a long way to go, but the problem with the retail is that it's a speculative trade. And when you're speculating and you put more regulation, you tend to hinder the trade. So it depends on whether you want to make it safer for the retail trader speculator, or do you want to make the market more efficient? So they are at cross purposes. So I would say a more efficient market will mean there's less chances of speculating. So if the bid-ask spread from this, for example, comes down, then the speculators also will not be so much tempted to do. So those volumes could come down. So overall, for the health of the market, right, there are a lot of decisions around retail trading, F&O trading that can be brought in, but you have to balance the need for liquidity in the market, which speculators provide, and that's very important, versus protecting the small investor from big institutional sellers gaming the market. So I think it's a fine balance. There are reforms which are in the anvil, but I think the pace will be slow because you've got to absorb each change. You have to give it time to absorb. But yes, the reform process is a continuous one.
All right, then. So the reform process, of course, is a continuous one, and there you had it in terms of the word coming in for what could possibly be done from here on as well. So before we let you go, I quickly wanted to get a sense of what you think is the fine line here. Is there anything, the fine print perhaps, or a caveat for the lack of a better word that you're looking at when it comes to this particular announcement?
So then one important thing is there, it's not in the fine print, but it's there, which is important that an FII can't do this for the same stock. If you're buying a stock in the morning and selling the same stock in the evening or vice versa, you cannot use this same day settlement. So they don't want it to be causing churn and somebody to time the market during market hours. So you can only do it if you're selling A stock and buying B stock. They have to be different. So same stock trades will not qualify for this netting. So there's a fine print there which you need to note. And that's a very healthy thing for the market.
All right, then. Thank you so much for taking time out and joining us this morning.